Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. Maybe this company is giving itself a little too much credit for its future plans. Let's dive into CXApp Incorporated's latest report. This one's all about a new agreement they've made and what it means for their cash situation and future stock issuances. So back on the 17th of October 2025, CXApp Incorporated, which we'll call the company for simplicity, entered into a new deal called Prepaid Purchase Number 3 with a company called Avondale Capital LLC. This new agreement is part of a larger securities purchase agreement the company already had with Avondale from back in March of 2025. Here is where it gets interesting. Avondale handed over $5 million to the company. But get this, the company is promising to pay Avondale back $5.25 million plus any interest or fees. This means about a $500,000 premium right off the bat, and there is interest on top of that at 5% per year. Until it is all paid off, they're also looking at an original issue discount of $250,000, which basically boosts the cost for the company. Now here is the kicker, the really important part. Avondale has the option they can choose to have the company issue its common stock shares to pay off this debt. It is like a trade. Avondale gives the company cash now, and down the road the company gives Avondale stock instead when the debt is due. The price for these shares isn't fixed, it is tied to the market price, but with a bit of a discount Avondale can buy them at the lower of $0.9142 per S-hair, or 91% of the average stock price over 10 trading days before they decide to buy. But there is a floor price, meaning even if the market drops way down, Avondale won't buy the shares for less than $0.1524 each. This stock price mechanism is crucial because it affects how many shares the company might have to issue. This deal is unsecured, which means the company isn't putting up any specific assets as collateral to back this loan. It also comes with the usual legal stuff like standard conditions for default representations and promises. For all the legals out there, the full details of this agreement are in Exhibit 10.1, which is attached to this report, and the original purchase agreement is also referenced. This agreement creates a direct financial obligation for the company, so it falls under a section of these reports dealing with such things. Now let's talk about stock dilution. If Avondale decides to take shares to pay off this debt, the company could issue a huge number of shares, up to about 34.4 million shares. This is based on the lowest possible share price they might issue them at, and that is a lot of shares. This could really spread the ownership of the company thinner for existing shareholders. And that is not all. The company already issued over 1.5 million shares to Avondale between the 9th of October and the 20th of October of 2025 under an earlier agreement called Paid Purchase Number 1, these shares were sold at prices between $0.6481 and $0.6739 each. This was also done under a specific exemption in the law that allows for certain private sales of stock without public registration. Now, the company includes the standard cautionary language about forward-looking statements. They're saying that their future plans and expectations might not actually happen, and that investors shouldn't rely too heavily on these predictions. They're warning that actual results could be very different due to various risks and uncertainties like market demand changes in laws, or even losing key management members. And finally, the report lists the exhibits, which are basically the supporting documents for everything they've reported here. So looking at the CXApp Inc. has secured a significant amount of cash, $5 million from Avondale, but they're setting themselves up to pay back more than they received, and they have an option for this repayment to come in the form of company stock. This stock kicker is a big deal because if the stock price is low, the company will have to issue a massive amount of shares, potentially diluting existing shareholders. Significantly, the fact that they've already issued over 1.5 million shares under a previous agreement and are now entering into another paid purchase agreement suggests they might be in need of cash to bridge operations or fund growth. The key risk here is the potential for massive dilution if the stock price tanks and Avondale opts for stock repayment. The company is essentially hedging against their own stock price performing poorly by agreeing to that low floor price for share issuances. In conclusion, CXApp Inc. is clearly navigating a challenging financial landscape. They're getting needed capital, but at a premium and with the potential for significant future equity dilution. It is a strategy that buys them time, but could come at a high cost for current shareholders. We need to watch their stock performance very closely to see if Avondale chooses stock repayment and how many new shares hit the market. Alright, that is our breakdown of CXApp Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this deal is smart financial maneuvering or a sign of trouble? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more real-time discussions. Thanks for watching. See you next time.